MacLane Wilkison, the CEO of tLabs and co-founder of Threshold Network. Welcome to the show.
Hello, thank you for having me, Avi.
So, MacLane, let's start by giving us a short introduction about yourself, and you had a long journey in the crypto space. Just give us the rundown.
Yeah, absolutely. So my story is I got into crypto back in 2013. I was working out of a place called the Hacker Dojo, which was like a hackerspace near San Francisco. And I sort of randomly popped into this SF Bitcoin Devs user group meetup, which is, 2013 was a very different time. There were only 5 people at this meetup, and I'm sure the equivalent today would be like, jam-packed. But the 5 of us were obviously myself, a guy named Michael Agorov, who I ended up co-founding a project with, and who's now the founder of Curve. Zucky Manian, who was an early contributor to Cosmos and Tendermint, and another one of the early co-founders of Dfinity, or now called ICP. So I was very fortunate to just sort of have that be my first exposure to the space. There's a lot of people working on super interesting things, and that were sort of very early to just exploring what was possible with Bitcoin and blockchain more generally. After that meetup, Michael and I started working together on different sort of little prototypes and just experimenting to try to understand like what types of things we could use this technology for. And obviously this was back like before Ethereum, so we didn't have an expressive smart contract platform that we could build stuff on. There was basically just Bitcoin, and there was these interesting sort of meta protocols on top of Bitcoin called Counterparty and Mastercoin that tried to add a little bit of functionality and expressiveness. So we were tinkering with those and trying to build like different things like peer-to-peer lending apps and various things that obviously just didn't really go anywhere, but were just for our experimentations. And eventually we ended up building something called NuCypher, which was uses technology called proxy re-encryption. And basically what we were trying to do was to add like a data privacy layer or access control layer to the space, so that if people were building like decentralized applications, they'd have some way to gate access to that private data. And obviously from there, a long story from when we started NuCypher to how we launched the network and eventually ended up with Threshold. But that was my initial sort of exposure to the space, and I was just very fortunate to just drop into this meetup with a bunch of people who ended up doing really remarkable things.
Yeah, sounds like a very interesting story, and we'll get to, I hope, to the privacy issues later on. But right now, give us the rundown on tBTC, right? What's it for, and who uses it?
Yeah, so tBTC is a decentralized and permissionless Bitcoin bridge. So basically a gateway to DeFi. And so it runs on Threshold Network, which is the successor to NuCypher, the projects that I started with Michael. And basically what tBTC allows you to do is, if you have Bitcoin, it allows you to quote unquote move that Bitcoin or bridge that Bitcoin to either Ethereum or Solana or a lot of EVML2s, basically any smart contract platform with the DeFi ecosystem. And generally the reason why you might want to do that is generally kind of broadly 2 things. One, you want to earn yield on your Bitcoin. So you want to generate some kind of return, either by lending it out and getting paid interest, market making on a decentralized exchange, for example, or doing various other activities. Or you want to borrow. You want to basically pull cash out from your Bitcoin, but not have to sell your Bitcoin. So you want to retain your long exposure to Bitcoin, so you can post that Bitcoin as collateral in a lending protocol like Aave or Compound and borrow stable coins against that. So that's basically why tBTC exists. There are obviously a lot of Bitcoin wrappers like WBTC, CBTC that exist in the world. What differentiates tBTC is it's permissionless. You don't have to onboard with Coinbase or with BitGo or some merchant to use it. And also it's decentralized. So the custody aspect is not, you're not sending your Bitcoin to any one single entity and trusting them to hold on to it correctly.
So the custody is self-custody, meaning you're the one like still holding the Bitcoin, or how does it work? If you can explain it, if it's possible to explain it to a non-tech person.
Sure. Yeah, so it's not self-custody. Obviously, like the maximally secure thing and self-sovereign thing you can do with your Bitcoin is to hold it yourself in a cold storage wallet. But the difference is, let's maybe compare it with WBTC. With WBTC, you have to send your Bitcoin to BitGo, and they custody that in their system, and then they issue you essentially an IOU token called WBTC. They issue it on Ethereum or whatever your destination chain is. And in theory, that IOU token gives you a claim on the Bitcoin that they're holding on to for you, which is generally fine. BitGo is a reputable company. But a lot of people, Bitcoiners especially, don't like trusting single centralized entities to hold on to stuff for them. And so where tBTC is different is that instead of the single entity holding on to your Bitcoin, there's a federation or network of signers who are a mixture of professional staking providers like P2P or Staked, a bunch of community members from various DeFi protocols and from Threshold Network that are basically collectively custodying this Bitcoin. So instead of one entity, you have 100 signers on a particular deposit address for tBTC, and they're all sort of working together using threshold cryptography to hold on to that Bitcoin for you. So no one single entity has control over that Bitcoin. No one single entity can move it. You basically need the network to come to consensus according to the rules of the protocol to actually move that Bitcoin. And the only reason they would ever move that Bitcoin is if you have tBTC, you want to go back to Bitcoin, and you want to redeem. So you would basically burn your tBTC. You would show that as a proof to the network of nodes. And they would, if they agreed, they would redeem, basically send you back collectively your native Bitcoin.
So like you mentioned, Bitcoin holders are kind of, let's say, conservative. And I think by last time I read any statistics about it, it says less than 6% of Bitcoin is used in some DeFi protocol or staking or something like that. So if somebody's listening and he's a long-time Bitcoin holder and he's thinking why should I get into it? Like, what's the yield that's possible? What's the advantages that using tBTC gives you? What door does it open?
Yeah. So basically, when you're obviously like the most secure thing you can do with your Bitcoin is nothing. Hold it in cold storage, probably with multiple signers on a wallet, and never touch it. Obviously, the second you do anything with your Bitcoin, whether it's deposit it into a centralized exchange, send it to like in previous cycles, someone like BlockFi or Celsius, or bridge it into DeFi using tBTC or WBTC, by definition, of course, you're taking on some degree of risk. What tBTC is trying to do is trying to give you access to DeFi while minimizing that risk as much as possible. So minimizing the counterparty risk to any single centralized entity, and trying to make it as safe as possible while recognizing that obviously you're taking on some degree of risk to actually deploy that Bitcoin. And the reason why you would do it is, like I said before, either to earn yield or to borrow against your Bitcoin. So if you're going to sell your Bitcoin anyway, let's say and buy a house, like you're going to dispose of it, you're going to sell it, you're going to get cash out. Instead, you could bridge it using tBTC. You could borrow stable coins, USDC, for example, against that tBTC and something like Aave. And then you still retain exposure, long exposure to the Bitcoin, which if you had just sold it, you would have lost anyway. The other piece is earning yield. Obviously, yields sort of fluctuate depending on the market cycle. Typically, with Bitcoin, you're seeing like single digit yields for the most part. If you're just looking for organic yields, like earning trading fees by LPing on a decentralized exchange. But there are ways you can, of course, be more aggressive and try to go after higher yields. So like what type of behavior we see some people doing is like leverage looping. So like borrowing stables in something like Aave, and then using those stables to like buy more Bitcoin. So just having like a leverage long exposure to the price of Bitcoin if it gets going to go up. There's also a lot of opportunities to use tBTC and Bitcoin to farm like new ecosystems. So there's a sort of explosion right now of Bitcoin layer 2s. And a lot of them are accepting tBTC as kind of a deposit token. So you can deposit your token into this new Bitcoin L2. You can use it on the L2, and you can earn either points or liquid tokens for that new ecosystem. They're basically just like essentially paying to acquire users. And obviously, like the APY on that can range quite a bit, depending on what the price of that token is, how aggressive they're paying incentives for Bitcoin deposits. But generally, just like setting aside points or liquidity incentives, It's generally like single digit yield if you're just like working off of organic trading fees by LPing in a decentralized exchange.
Got it. And Bitcoin DeFi is really a hot topic right now. I think part of it is because of all of the new solutions being developed. Part of it is perhaps because other tokens are not doing so great in comparison. Where do you think will be? I don't want to ask you like too hard to the question that's true, but let's say in 3 years, do you think we're still gonna have this big fragmentation with like Solana and Ethereum and
Mm-hmm.
now we have Base being pushed, right? And everything, or do you think we're gonna see some consolidation once there's gonna be real strong Bitcoin DeFi options, let's call it like that?
Yeah, I mean, I think it's an interesting question and sort of thought experiment to try to think about how the world will look a few years from now. I mean, I think the way I think about Bitcoin is like Bitcoin is sort of its own singular asset. It is digital gold. It's something that no one else, at least credibly, is really able to or trying to compete with. So it's sort of off of its own sort of asset within crypto assets. And I think it's won that narrative. Like, I don't think any other blockchain is really credibly able to compete with Bitcoin on like the digital gold. So I think Bitcoin is the most pristine crypto asset. How we think about it is at threshold and tBTC, we're basically agnostic as to where that Bitcoin should be deployed. So we want to be a credibly neutral platform and bridge that gives you access to whatever ecosystem you want to deploy your Bitcoin into. So from our perspective, it doesn't really matter if Ethereum is the winner in DeFi, if Solana is the winner in DeFi, if one of these new Bitcoin L2s is the winner in DeFi. tBTC will basically give you the rails to access that. And so we don't want to preference any particular network over any others. We just want to be sort of this liquidity hub that can make it super easy for you to move your Bitcoin to wherever you want to use it. So from that perspective, we want tBTC to be everywhere. So one of our focuses is just expanding the number of networks and ecosystems where tBTC is supported, so you can directly bridge from Bitcoin to not just Ethereum, but Solana, to Sui, to Starknet, to Arbitrum, to Base. Because like you said, like there's a huge explosion and fragmentation of DeFi ecosystems. And it's hard to know like which one is going to win. Right now, I think just sort of just looking at where tBTC is used in practice, most of it is on Ethereum L1, but we're seeing very strong growth on a lot of the EVM L2s like Arbitrum and Base, also some of the new Bitcoin L2s and some of the non-EVM chains like Solana as well, I think are very promising ecosystems where there's clearly a lot of demand for people to be able to deploy Bitcoin.
I see. Yeah, I really hope that once Bitcoin is gonna break out of the current all-time high, we're gonna see like Ethereum and Solana and everyone recovering from the bad period, right? People are saying like out season is not coming anymore, but at least because there's really like great technologies, like you said, like the actual usage is on Ethereum, right? So
yeah, I mean it's an interesting time because like as you pointed out, like Bitcoin dominance has kind of been trending upwards. And Bitcoin's been basically the only crypto asset that's been performing particularly well. But like clearly like DeFi has pretty solid product market fit. Like people have an appetite to earn yield, they have an appetite to borrow, they have an appetite to lend. And they have an appetite to do that with the best crypto asset, which is Bitcoin. Obviously it's harder to say, whether that translates into good price action for, some of these DeFi protocols, or if it's just, everything just accrues to Bitcoin. But certainly like, whether or not that translates into, an altcoin bull market, for DeFi, at least I think there's very solid product market fit there and clearly a demand to deploy Bitcoin and other assets as well.
Yeah, might be we're just in a very particular type of market because of the whole geopolitical and economics situation right now in the world.
Yeah, I mean, I think this is this is sort of this interesting moment for Bitcoin to potentially prove itself and sort of win this once and for all, the sort of narrative of digital gold. Like if, this crazy geopolitical possible trade war sort of era we're entering into, if, if the dollar loses its status as like the sort of the reserve currency or the reserve asset of the world, there's not that many places, there's not that many alternatives. Like there's gold, historically, and now there's Bitcoin. And so you've seen a little bit the last couple of weeks, the sort of possible beginnings of a decoupling between Bitcoin and obviously the rest of the crypto asset world, but also like the traditional markets. So you've seen yields on treasuries spiking, you've seen your stock markets dumping, and meanwhile Bitcoin is holding strong or potentially even going up a little bit. So I think this is like there's a possibility that this will be sort of like this inflection point where Bitcoin really decouples and sort of wins the day as it's I think a lot of Bitcoiners have hoped that it becomes the sort of new alternative safety asset or reserve asset. And obviously, like, Bitcoin is the only crypto asset that can compete on that narrative. Like no one else can.
For sure. Yeah. For a while there, everybody was starting to believe, okay, it's just another tech stock. That's how it performs. And, that's what we have. But, yeah, now it's, like you said, it decoupled from the NASDAQ, right? It's becoming the digital gold in a real life situation. So it's a very historic moment to see. And, obviously with time we'll see what really happened. But yeah, right now it's a very, very interesting point. Yeah. So next thing I wanted to talk about is the restructuring of the Threshold network. You very recently came out with an announcement. Can you tell us what is that all about?
Yeah, so historically Threshold has been basically a multi-application network for threshold cryptography apps. So there was tBTC, just one of the applications. There was tBTC. There was the access control product that was the sort of from NuCypher. There was THUSD. But I think what the DAO and the network realized is it was basically very difficult to have sort of this multi-application setup and have one sort of single North Star or strong narrative. And we wanted just to refocus the DAO's energy and attention and focus exclusively on tBTC, because I think given this resurgence in Bitcoin DeFi, there is really an opportunity for us to make tBTC be the rails that people access DeFi with Bitcoin. And we needed a much stronger focus to make that happen. And we needed sort of this North Star of making tBTC successful to do that. So instead of the multi-application network, Threshold is now just the tBTC network. We're focused exclusively on launching tBTC in as many ecosystems as possible, on scaling TVL, on expanding the number of DeFi protocols where tBTC is used as collateral or as an asset, and then ramping bridge volume and velocity as well. The way tBTC makes money is on bridge fees. So when you redeem tBTC back to native Bitcoin, the network charges 20 basis points as like a service fee. And as part of this reorg, we turned off T inflation. So T is the native token for Threshold. So there's no longer an inflationary asset, and bridge fees, or a portion of them at least, are now used to repurchase or to buy back T on the market. So now there's a very close, basically, connection between the success of tBTC as it scales and gains adoption and starts to generate increasingly more revenue. That revenue flows back to the T token via this buyback mechanism. So part of the reorg was also sort of fixing the tokenomics and making it the network much stronger on a fundamental level. And actually, like it's on a run rate basis from Q1, the network is profitable. So based off of the amount of fees that it generated from bridging, and like all the expenses associated with running the network, there is profit to direct to these buybacks. So going forward, we're in, I think, a much stronger position, just both from like a financial perspective, a value accrual and tokenomics perspective, and from the perspective of tBTC being very well positioned to grow very aggressively.
Can you share some details about your TVL and, like how much, I mean, if that's, if that's known, like how much do you
Yeah.
generate via the fees?
Yeah, so the TVL of tBTC right now is around 4,500 Bitcoin. It's like roughly, I'm not sure what the price is right now, but roughly $400 million USD. Uh, but obviously, like the way the network monetizes, like I said before, is bridge volume. So people minting and redeeming back and forth on the bridge. And so we're very focused as well on not just 10xing TVL, but 10xing bridge volume, because that would in turn 10x revenue. Bridge volume is actually very interesting to look at, particularly if you compare it to some of the centralized Bitcoin wrappers like WBTC, which basically has very little to no bridge volume. Um, if you compare it against the TVL, so WBTC is at like, I don't know, probably 12 billion or so TVL. And so tBTC is an order of magnitude less TVL than WBTC, but on a bridge volume basis, it's actually quite close. And a lot of this has to do with just the permissionless nature of bridging on tBTC versus the centralized options. You just go to the dashboard, you interact with the smart contracts to burn tBTC, and then you get back to native Bitcoin. So you don't have to onboard with, some centralized entity or create an account with Coinbase or BitGo or whoever. You just interact directly on the dashboard, directly with smart contracts. And so I think like we've seen multiple billions of bridge volume. So very heavy usage of tBTC as a bridge relative to the amount of TVL that it has, obviously, which is great from a free generation perspective. And we're very focused on continuing to grow that. I believe Q1 run rate in bridge fees was around $4 million or so on an annualized basis. So we're looking to, with the new reorg and restructure of the network and the focus on tBTC, we're looking to 10x that in the medium term, sort of our stretch goal.
Great. Yeah, that's a great business plan. But it's interesting to think about it, the fact that being decentralized actually gives you an advantage over the centralized solutions, because usually people, I mean, at least with exchanges, it seems like they have the advantage by being able to make it easier, I guess, on users rather than focus on privacy, which
Yeah, I mean, I think there's a couple of things. Like one, for like to take WBTC, for example, you and I, as retail users, we can't even mint or redeem WBTC. It's only basically this permission subset of, I think they call them merchants. So basically, these are institutions or businesses that have the ability to mint and redeem WBTC. And basically, you can only do that if you are like an institutional, investor or participant in the market. You and I can't go to BitGo and directly mint WBTC. But you and I can easily go to Threshold and directly mint and redeem tBTC. And so we see a lot of, the long tail of users are able to do that in just small amounts. And also, like, because it's permissionless, we see a lot of arbitrage activity going back and forth to take advantage of, any like price discrepancies between the price of tBTC on like various DEXs and like the actual price of Bitcoin. And that's aggressively used by a lot. We see like fairly significant market makers that are and prop desks that are doing that kind of activity.
So it creates a real decentralized market, not the permission DeFi, which is
Exactly. I mean, I think like,
um,
for me and I think a lot of other people in the space, like that's like, the whole point of DeFi and Bitcoin is to have self-sovereignty and to not be reliant on other people to tell you what you can and can't do with your own money and with your own assets. And I think if we're just replicating like the sort of the permissioned nature of TradFi on crypto rails, it kind of begs the question, like, what was the point of building all these things in the first place if we're not sort of building them to be maximally censorship resistant and sovereign?
I agree completely. And we talked about before about privacy, right? I wonder if using tBTC compared to our solution, or just using Bitcoin itself, if there's any privacy advantages for users or end users.
Yeah, so tBTC is fully transparent. It's a bridge. It's not like a mixer. It doesn't obfuscate like the source or destination of funds. So if you're looking at tBTC scan, which is the tBTC Explorer, you can see like the deposit addresses on the Bitcoin side, where they bridge to on Ethereum or whatever smart contract chain they're bridging to. And then vice versa, you can see like, if an address on Ethereum redeems, you can see, where that Bitcoin ended up on the Bitcoin blockchain. So it doesn't like provide privacy in that sense. Obviously, what it does do is once you've bridged your Bitcoin to tBTC, you now have access to the world of DeFi. And the world of DeFi includes certain privacy tools that you could take advantage of, like Tornado Cash or Railgun, etc. So there are ways basically that I think tBTC can be very complementary for people who are looking to sort of assert their financial privacy.
Got it. Yeah, the people that are that want to use such services they would know. They don't need explanation from us. So that's great. Yeah, I'm thinking, what else do you think our audience need to know about tBTC and threshold? That we didn't get to.
Yeah, I mean, I think it's interesting to touch on sort of maybe like where I think Bitcoin bridging is going. So historically, the best that it was thought that you could do from a trust minimization standpoint for Bitcoin bridging was basically an honest majority assumption. And that's basically what the current version of tBTC is. So what tBTC tries to do, instead of trusting, one entity to custody your Bitcoin and to give you tBTC, instead, we try to get really big signer sets and distribute that trust across many, many different individuals, different entities, and different participants. But ultimately, it was still like assuming like a majority of them, were abiding by the rules of the protocol correctly. Recently, in the last year or so, there's been this new design that has opened up called BitVM2. And BitVM2, in theory, because there are not yet any production implementations of BitVM2 yet, but in theory, it can allow us to reduce that trust assumption from an honest majority assumption to a 1 of n trust assumption. So as long as one participant on a custody wallet is honest and rational, then there's no way for basically the signers on that wallet to collude and steal the Bitcoin. And theoretically, like you as the depositor, if you were one of the signers on a deposit wallet, that's effectively trustless. So I think it's still quite early for this sort of new BitVM2 design space, but we're tracking that very closely. And I think it would be very interested in potentially upgrading tBTC so that it can use some of these BitVM2 vaults as part of the protocol and improve that trust assumption pretty dramatically. Because I think like ultimately where we want to position tBTC is we want tBTC to be the most trust minimized way to deploy your Bitcoin wherever you want to deploy it. Right now, that's the honest majority. In the future, that could be 1 of n via BitVM2 or Opcat or some other mechanism. But we just basically want tBTC to be the most trusted place where you can just deploy your BTC and not have to think about it, not have to worry that the rules are going to change from under you, not have to worry that there's going to be some sort of, vulnerability or exploit that allows your the underlying collateral to get rugged. And so we're very focused on basically always making sure that tBTC is maximally secure and censorship resistant, and sort of striving to live up to the ideals of Bitcoin and getting like these synthetic representations of Bitcoin to be as close as possible to actual Bitcoin as we can.
Yeah, those are great intentions to have, right? And I mean, it shows that you're from a different age right now than than the current environment, right? So I wanted to ask you, considering you've been in this space, and you've been developing various solutions, for 12 years, right? What's your advice to any developers that are in the space right now or entering crypto? what would you advise them, right? Whether it's, going chain agnostic or whatever. What's your advice to people that are building in this space?
I mean, I think it is to build something that you believe in and that matters for the world. Like there are a lot of ways to make money, particularly in this space. There are a lot of ways to make money in not so great ways that are not so good for the world. Um, and so I think particularly recently, like I mean, this is sort of a recurring thing with every cycle. Like sort of things go overboard, and people are I think doing things that frankly, even if they're successful, like just doesn't matter, or it's actively bad for the space or bad for the world. And I think I would like to see build more people really have conviction and build something that they think is going to make an impact, a positive impact on the space and for users and for for Bitcoin, for DeFi. Um, so and a lot of times that means not chasing like whatever the latest narrative is. It means having some sort of contrarian viewpoint and high conviction that this particular thing, whatever it is worth building and worth bringing into existence in the world, and really sort of building that and not just chasing whatever the current is and whatever the current narrative is. Because, like I said, there's a lot of ways to make money. I think once you've made money, hopefully you want to be proud of the way that you made it, and that the thing that you built was something that was good for the space and good for the world, and that deserves to exist.
That's some great advice. I would say we definitely need people that are more focused on the reasons why this whole space came about, which is ensuring sovereignty and freedom and like you mentioned, censorship resistance, and not necessarily dumping your bags on on exit liquidity, you know, uh, which we see a focus of some people. Yeah, but again, we're in a very interesting point in time. It could be an inflection point that things change. Okay, so I want to thank you so much, MacLane, for coming on today and sharing so much about tBTC with us. Where should our audience go if they want to learn more about everything that you do?
Of course, yeah. Thank you, Avi, for having me. The best way is to join our Discord. So you can just head to threshold.network and find the link to our Discord. That's where the community is most active. There's also links to Telegram, to our socials. On Twitter, it's at the T Network or at tBTC_project. So yeah, I mean, we'd love to see a lot of your audience join our community. We'd love to see people minting and redeeming Bitcoin and then deploying tBTC either on Ethereum or Solana or any of the many new ecosystems that we'll be launching support for very soon.
That's great. So thank you again, MacLane.